morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. The top headlines at this hour. Nifty and Sensex hit fresh highs in opening trade. India VIX advances. And open interest surges in Just Dial in ACC as traders take fresh positions in their respective stock futures. L&T is a top gainer on the Nifty as the board plans to consider a share buyback on Thursday. And Infosys is a top Nifty loser after CFO and MD Ranganathan resigns, citing his wish to pursue professional opportunities in new areas. And rain intensity finally drops in Kerala, aiding rescue operations with more than 7 lakh people displaced and 370 dead.
Okay, those are the top headlines at this hour, but let's also tell you what's happening with the markets. We've hit fresh record highs in today's level with the new week now. Things are looking pretty good. In fact, the cues that we're getting from the futures and options market have also been quite positive. So currently, Nifty spot trades above the mark of 11,500 at 538. Bank Nifty is also seeing some traction, and that too is inching very closer to its all-time high levels, which is somewhere about 28,377. So watch out for that one. I just want to pull up the futures first of both. And let's check if there are any bit of long positions being taken even at this higher levels, because the open interest had not surged so much, at least in the last few days. So as you can see on your screen, Nifty open interest, futures open interest is just up about 1%. Premium is intact at 15-16 points, so that's a good sign. Bank Nifty futures 5.5%. So I think more traction seen as of now for Bank Nifty futures, 5.5% higher in terms of open interest. All your sectoral indices this morning are trading in the positive territory. Just some bit of profit booking seen for Nifty ID, but not a problem because that index has already gained too much on Y2D basis. In fact, it's the top sectoral gainer if you compare on Y2D basis. Well, options data is giving you some positive cues. In fact, we got this cues on Friday itself. So if you look at the 11,500 call strike, now remember on Friday, the open interest for this strike was down 20%. This was the strike which was sitting with maximum open interest for the August series. Now, call writers are running for cover, whoever had written this call strike, and now the maximum open interest has shifted from 11,500 call to 11,600 call strike in today's trading session. So watch out for that one. And as we speak in today's trade also, there has been some shedding of almost 1.5 lakh shares when it comes to the 11,500 call strike. Look at the put side. The put writing, which was very much prevalent around the 11,300 and 400 mark, after Nifty's conquered the 11,500 mark, almost close to 10 lakh shares as of now, just 45 minutes into trade, and almost 10 lakh shares have been added for the 11,500 put. So watch out for this one. The next, obviously, level on Nifty one would watch out will be the 11,600 mark. While the markets are moving higher, remember, the FIs, if you look at their data, what they've been doing, definitely they've been hedging their positions, I would call it, as the markets are inching higher to record levels. They've created short positions in the last 6 trading sessions. Almost 34, close to 34,000 contracts have been added on the short side, and the ratio towards the net long, net short has also come down to almost 52%. And on the index option side, we've seen some bit of hedging coming by, because if you look at Friday's data, they bought a lot of call long contracts to the tune of 22,000, and also some bit of addition was seen on the put long as well as the call short side. So that's the sum and substance of the option side. But again, what's happening on the stock futures?
Well, Navneet, Just Dial, as I mentioned earlier, is right at the top of the list among stocks which are seeing substantial increase in open interest, and that's followed by Divi's Laboratories. Both of these stocks are advancing, and we've also seen longs building up with ACC not too far behind. That's also up and about 10% added in open interest. Balkrishna Industries and Kaveri Seed Company, among others, which are also advancing in trade and also seeing fresh longs building in. I do want to mention Federal Bank. This is perhaps one of the few banks which is actually losing out in today's GF trade. It's down by as much as 6% right now. And it is seeing substantial increase in open interest at this point in time, considering 7.5% increase in OI. So shorts there. Let's pull up the list of those which are seeing unwinding as well. Not too much to speak for, except for IFCI, which stands right at the top. Raymond did go into the F&O ban, and that's the reason why we're seeing a decline of around nearly 1.6% in OI. But when it comes to HDFC Bank, Shree Cement or Kotak Mahindra Bank, not too much to speak for. On the whole, I'll be watching out for Just Dial and Devi's Laboratories on the advancing end and Federal Bank on the losing side of things, Navneet.
Okay, we'll be getting your views on all these stock futures, but before we get our guest in the show, here's a reminder for you all. If you have any queries in the derivatives market, you can call us now on 022-4540-4141. You can also write your queries on Twitter or Facebook with AskPQ hashtag. Well, let's welcome our F&O experts then. Abhijit Phatak of Definedge Solutions and Chandan Taparia of Motilal Oswal Securities are here with us. Good morning to both of you gentlemen, and appreciate you joining us once again on the F&O Show of Bloomberg Quinn. Let me come to you, Chandan, first. We've conquered the 11,500 mark. The open interest, maximum open interest has now shifted to 11,600 call strike. So what are you doing at these record high levels? Are you going long on Nifty?
We are continuously holding the long position in the market because it is continuously making higher tops, higher bottom formation and respecting to its rising support trend line, and in fact respecting to its rising channel on the daily scale. 4 days back it came to 11,340, exactly tested the support trend line, turned higher, surpassed the previous lifetime high of 11,490.95 zone, and adding the fresh momentum. So overall the price setup indicates that positive to range one more could continue in the market. Looking at the options database, we are witnessing fresh put writing at 11,400, 11,500 strike, and now the highest call OI congestion has shifted from 11,500 to 11,600. In last two trading sessions, we have seen open interest shedding in the call side of 11,500 and fresh writing is emerging at 11,600. So that is also giving a sense for an up move towards 11,600, 630 kind of level. So overall trend could remain positive. We are expecting support to shift to higher level. So recommending to go long with a stop loss of 11,450 and expecting index to head towards 11,600, 630 kind of level.
Abhijit, good morning to you as well. I believe you are also fairly constructive on the indices at this point in time.
Yes, as long as it is above 11,490, which was the previous high, so one should always look for buying on any dip. Problem is buying right now will be a bit risky because the stop loss is almost 70-80 points lower. But it is still a buy on dip, and I wouldn't be surprised even if it goes to 11,700 this expiry.
Okay, so that's some positive cues coming in from both our experts, where Chandan recommends to go long. In fact, he's saying to hold on to long positions. He's looking at a target of 11,600, and Abhijit says to buy on every dip that you can see on the index, and he's also suggesting to hold on to your long positions, if any. But on that note, let's also get you some stock future strategies for the day. Chandan, let me come to you first. Which are the stock futures that you're betting on this Monday morning?
Yeah, L&T Finance, this stock is on radar. It has seen the open interest addition of 6 to 7%. On last trading session also it formed a strong price pattern. We have seen a breakout from its pole and flag pattern. Fresh built up of long position with put writing, and the buying interest after a long consolidation indicates that positive momentum could extend. It has surpassed the previous hurdle, so recommending to buy with a stop loss of 183 and expecting this stock to move towards 198-200 zone. Second is buy on Hindustan Unilever. We have seen a breakout from a small symmetrical triangle pattern on a lower degree scale. It has also surpassed its multiple hurdle of 1750, 1760 zone and holding well. Longs are intact. Open interest activity started to see and surge in the counter. So recommending to buy with a stop loss of 1770. And this stock has even potential to move towards 1840 kind of levels.
Okay, and Abhijit, I believe you have one long idea and one short idea for us today.
Yeah, actually there are a lot of long ideas, but I would like to take a safer one, which I feel is undergoing some kind of reversal. HDFC Bank, which was down for the last almost 3 weeks, it is showing signs of a reversal because it made a doji on a weekly candlestick chart last week, and that also was at the 20-week moving average. So that can be bought with the stop loss of 2070 with a target of 2130 and 2150. And there are still some stocks which are not performing, like Federal Bank you suggested, and even Castrol India is not a very strong stock. So one can go short in that right now near 157, 158 with a stop loss of above 160 and targets of 150 and 145.
Okay, so that's one long and one short strategy coming from Abhijit. But let's also discuss a couple of stock futures that are buzzing in today's trading session. Chandan, I want to come to you first. On Friday, we did see a lot of traction coming by for a lot of these pharma stocks. And today, once again, you've got stocks like Cadila, which is up in trade, and also stocks like Glenmark, which has seen traction coming back into this sort of market. So any sort of pharma counter, I remember Torrent Pharma witnessed some long positions on Friday. Would you take a bet on any of these stocks?
Yes, we are looking positive momentum in the pharma counter because on a weekly scale it has given a breakout from its falling channel, and this channel was working well for last 3 years. So a major breakout of last 3 year price pattern is attracting some buying interest in most of the pharma counter. So some short covering, some long built up, both are visible in this counter. First, talking about the Glenmark, the stock has formed a head and shoulder pattern and also given a breakout above the same by holding above 605 level. So now till it holds above 605, it has potential to move towards 640, 650 kind of zone. We have already seen a strong momentum in Sun Pharma, and when it surpassed its level of 590 on the result day. So because of that, some short covering and the fresh long started to seen with put writing activity. It has also negated its formation of lower top, lower bottom. So again, buying interest could emerge. So Glenmark, Sun Pharma, Lupin could be the counter where buying interest could emerge. Talking about the Cadila, this is comparatively high volatile. It fell down sharply, recovering. So on bounce back move, it may find hurdle near to 383. So comparatively, I'll prefer more going long on Glenmark, Lupin, Oro Pharma, and then Sun Pharma.
There's a very interesting move playing out on Apollo Hospitals. Over the last 5 trading sessions, the stock has advanced by well over 21-22%. And there is no relent here, and this is on the back of large volumes too. Today too it is advancing by as much as 2%, and more longs building in here as well. Just about 5 sessions ago it was trading well below its 20, 50, 200 daily moving averages, but since then it has just moved well above that mark and it just continues to see a lot of strength. Abhijit, what would your view be on Apollo Hospitals? Would you take fresh long positions or would you wait for perhaps a dip? How would you approach the stock and what levels would you keep an eye on?
1170 futures is a level which should be a stop loss for any longs, and any dip should be used to go long in it with 1170 as a stop loss. But at the same time, if it doesn't give a dip and if it goes above 1210, 1215 on the futures, one can buy that with a stop loss of below 1200. And I'm expecting 1270 at least on this stock in the near future.
Okay, that's Apollo Hospital for you. The stock actually has been witnessing good amount of long position. L&T is the top gainer on Nifty. Remember, it's a heavy weight with 3.5% weightage, and today's gain of almost 5.5 to 6% will tell you how much contribution that we're seeing only through L&T on the on Nifty, the sort of moves that we've seen. Nikhil Raja on Facebook has also written to us. As you can see on your screen, L&T is contributing the most, almost 23 points. He wants a view on this counter. Chandan, a 6%, almost a 6% move, now trading above the mark of 1300. What would you suggest?
Yes, we are positive on the L&T. However, the nature is positive to range bound. It has exactly taken support near to 1225 and witnessed a bounce back move post core protection this comment. It has surpassed its 50-day exponential moving average. So slow and steady now it is all set to head towards 1355, 1360 level. We have seen the strong activity in the option front. Coal unwinding with fresh put writing, and the activity started to even seen at 1400 strike. So that indicates that positive stance could continue for next couple of days. Till it holds about 1285, one can continue to be with long position towards 1350, 1370 kind of zone.
Okay, so that's the view on Larsen & Toubro, which is advancing by as much as 6% currently, and we have seen a lot of strength. But let's address the realty sector. And in this case, DLF specifically, while DLF witnessed an over 50% jump in its June quarter top line, the company's margins contracted to almost 21% this time. Yatin Mota caught up with the group CFO Saurabh Chawla to discuss the key factors at play, that started by asking about the company's strategy to achieve its pre-sales target. This is what they were saying. Listen in.
We have guided the markets to annual run rate of about 2,000 to 2,250 odd crores. So that is where we are comfortable right now, given the ground conditions and given various issues, including interest rates wherever they are. So that's something which we are comfortable, and we have guided the markets. We've done Q1 at about 600, and we hope to maintain this momentum going forward. I want to, of course, qualify that ours is a lumpy business, so please don't look at and judge us on a Q&Q basis, but look at more what we achieve on an annual basis.
Okay. So for DCCDL, the net leasing was muted in the first quarter. How do you see it shaping up for the rest of this financial year?
We don't have much space to give out.
Okay.
So I mean, if you look at gross leasing, it will be a much higher number. We are operating at more than 95% occupancy levels in most of our buildings. So there's not much to give out, and hence you see a smaller number there.
Okay.
We are building out 2 properties, one within DCCDL. It's a 2.5 odd million square feet in office space in Gurgaon, which will start getting renting out next year. And so is another one which is in Chennai, which is about 1 odd million square feet, which DLF will deliver to DCCDL, and DCCDL will start to earn rentals on that property also in the next fiscal year. So these 2 properties total about 3.5 odd million square feet. That's the new pipeline that we have on the office space within DCCDL.
Okay. Sir, talking about the debt level, your net debt level has increased on a year-on-year basis. Of course, this was to purchase land and due to additional capital expenditure. If you look at the net debt picture, how do you see it by the end of this financial year, and what are the plans to get the debt down on a net level?
So our net debt is about 7,000 odd crores. Only by 2 capital actions, we should get it down to, maybe a 3-figure number. And the 2 capital actions are where we have to do a QIP sometime in this fiscal year. And we will also have to, and the promoters will infuse about 2,250 odd crores when they convert their warrants. So, I mean, these 2 are pretty much on the headline there. Which will reduce debt to a 3-figure number, and we have already guided the markets that on the development assets we will be net debt zero, and I think the market should get comfort that other than generating free cash, these 2 actions itself will take us to that point.
Okay, so good to know that. And in terms of the project pipeline, which are the new launches or the deliveries that you plan in the next few quarters? And also, if you could tell us which are the pockets in which we could see some new launches coming up?
So, I mean, we have unsold inventory of about 13,500 crores, which will get sold over the next 4 to 5 years. But in addition to that, if you've seen, we have reversed our sales and our margins, of the previous year's sales, as we have to comply with the new accounting standard.
Okay.
So as we deliver those properties, as we issue possession letters, so we will be capturing net margin of about 5,300 odd crores over the next 2 odd years. So it's a pretty buoyant outlook as we look at it right now, and hopefully if the market conditions improve, the buoyancy will also continue.
Okay. And sir, any particular geography or pockets of strength that you are looking at the company level, wherein you are looking at some good traction? Because post GST and RERA, a lot of unorganized players have found a way out, and probably organized players are benefiting because of this. In the last 1.5 year and moving forward in the next 1.5 year, what kind of a traction do you see coming in because of the new regulations? And also, if you could tell us which are the pockets of strength wherein you could see some good liquidation of inventory coming in and demand building up?
No, we have already guided that what we are intending to do. So the only pockets that we are, I would say, meaningfully involved is Gurgaon and Delhi, and that's where our concentration would be. We do have other projects across the country, but they are not of that significant size and scale as what we have in the NCR.
Okay, but sir, have we seen demand substantially pick up, because real estate rates have been stagnant in some places. In some places, probably we have seen some price drop. So, is really the price correction or probably the time correction helping you liquidate the inventory, and moving forward, do you see some demand, especially in the festive season, for the next 1 or 2 quarters?
Well, I can't predict what happens in the future, but I think what we can see very clearly is, and I think we have said that in our presentation, that we are looking at unsold inventory in the market now coming down from 19 quarters to 13 quarters, and these are not our numbers. These are people who track the inventory build up on the ground. So obviously, if the absorption levels are increasing, the unsold inventory will continue to reduce.
Okay.
And it's tough for new inventory to really come to play, because most of the developers are facing liquidity issues in the unorganized sector.
Right.
The organized sector continues to do better than the unorganized one. So obviously the new supply will get challenged whilst the old inventory will get absorbed, and at that particular point of time, then we should start seeing an upward traction on pricing also.
Okay. And sir, one final question on the rental business. Given the fact that again there is a situation of oversupply in the northern India, particularly in NCR in Delhi. So in that case, do you think there is limited scope for rentals to improve, and probably this business of yours would probably stagnate at the current levels, since there will be no absolute rental growth that we could see?
I think you're using a very generic term over here. We are in the grade A office space. We do not compete with the other kinds of grades in the office space. So today the rentals of a property in the same neighborhood can be anything between 45 to 50 rupees to 100 to 115 rupees. So we are in a very different segment of the market. We cater to global majors. We have large volumes, and we don't see any let up in demand for grade A offices, and yes, it is highly correlated to what is happening with global businesses. That may have an impact, but not from the supply perspective.
Okay, that's the management of DLF clearly stating that they're looking to reduce the unsold inventory, which is worth almost 13,500. But let's shift focus. The stock's up actually 2.5%. So let's quickly get a view on this stock as well. 215 or 16 is where it's trading. Abhijit, any view on DLF's charts?
Yeah, DLF has a resistance here 220, 225. It can go till there, and it is bullish as long as it is above 205.
All right, we do have another query on Facebook, and this is on IRB Infra. Now, it's not a counter that's been spoken about much, but let's pull up the futures here. And we're seeing very little traction. And the query, of course, is on the long-term aspect of IRB Infra. That said, I'm certainly going to take a short-term view and considering the technicals on this one. Chandan, do you track IRB Infra? Is this on your radar? And what would you suggest the viewer could do with IRB Infra at this point?
The stock is making lower top, lower bottom formation on the weekly scale, but has been consolidating from last couple of trading sessions. So it has recently taken support near to 184, 185. So if someone is holding, we'll suggest to put trailing stop loss of 185. On bounce back, it can go to 200, 205, where we'll suggest to exit on move. So a limited move could be seen, a bounce back move could be seen. Medium term trend is in pressure, but short term consolidation trend with support indicates some bounce could be seen. So put the stop loss of 185 and try to exit if it comes to 200, 203, 4 kind of zone.
Okay, that's the technical view coming in on IRB Infra. Let's address the top F&O loser for the day, and that's Federal Bank. Remember, even on Friday's trade in the second half, this counter had lost steam, and there was some bit of selling pressure that was seen. So almost 9% higher in terms of open interest, telling you fresh shots continue to be created on Federal Bank August futures. But I also want to pull up the ABAT function of Bloomberg, which tells you the volume compared to the average volume seen in the last 20 trading sessions, and the blue line is actually the average volume of last 20 days, and the white line is giving you a trend of the projected volume for today's trade, which is clearly on the higher side. I think we've almost done more than 50% of Friday's volume so far on National Stock Exchange. Chandan, coming back to you, Federal Bank 81.5, 5% down in today's session, telling you clearly it's falling on very high volumes. Even if I look at the deliverable quantity of Friday was 40%, so cash-based selling has been seen in this counter. What should one do if they have short position? What should be the target?
2 weeks back, the stock has given a sign of the breaking down formation as it failed to surpass its multiple hurdle of 91 and surrendered below 87 kind of level. So the sell call triggered below 87, and in last 2 trading sessions it formed a bearish engulfing and slipped below its 50-day exponential moving average. Today we are witnessing built up of short position as open interest surged by 9 to 10% with sharp decline in the price. So weakness could continue. Those who are holding can continue to now trail a stop loss of 86. On downside, it has potential to go to a 78, 77 kind of level.
Okay, watch out for Federal Bank, which is looking dangerous at this point in time for those who are long on this one. But that said, Abhijit, I'm going to come to you, or I'm going to ask you whether or not you've seen anything interesting on your charts in the last 15-20 odd minutes that you may want to talk to our viewers about.
On Federal Bank?
Or it could be any stock actually.
Yeah, one stock which is looking very bullish is Coal India Limited, and Coal India, as long as it remains above 282, 284, it can give a very good move, maybe even up to 300 levels.
Okay, so Coal India, which is up 2%, Abhijit feels it can go up to levels of 300. So that's a long call coming in on Coal India. Chandan, what about you? Anything interesting that's popping up on your screen?
Talking about the screen, this LNT's, first talking about Coal India, it is forming the rounding bottom. Formation, multiple rounding bottoms are seen, so some surge could be seen. Apart from that, stocks like Yes Bank, where it has seen a consolidation breakout, longs are intact, momentum could be seen. One can look at the pharma name like Glenmark. We are positive on the Kaveri Seed as well. L&T Finance, L&T, all these stocks are likely to aid, and I think Reliance also can aid some momentum to index as well.
Okay, that's the view coming in from on Glenmark and Reliance Industries. Some interesting calls coming through. But we run out of time, so I'm going to thank both our experts, Abhijit and Chandan, for joining us and taking us through their views on the markets, as well as solving some of our viewer queries. And with that, it's a wrap in this edition of the F&O Show. For more news and update, stay tuned at Bloomberg.